Hey, good morning, everybody out there. Welcome to Coffee with Great Wealth Strategies. This is Eric Kenyon, also known as Regular Joe. Why am I Regular Joe? Because I'm filling up your cup every day with some nice Java. No coffee today, it's actually a latte. Hope everybody had a fantastic, wonderful Thanksgiving. We certainly did. We had a lot to be thankful for in our family, and really enjoying what's going on. And I'm enjoying doing what I'm putting out here for you guys. This is going to be a little bit off the cuff today. I'm going to talk a little bit about some random research that I've been doing and share that with you guys. But one of the things that I found interesting is I've gone and looked back at the S&P, Standard & Poor's, and looked at that index since 2009 through currently through today. And what's important to notice is that it has had a robust, unbelievable surge over that period of time from 2009 through 2012. It's been up. It's up right around 114% as it sits today, and this is the end of November 2012. While at the same time, this is what's really interesting about this. At the same time, roughly, well, not at the same time, since January of this year through currently today, $57 billion has actually exited the stock market. So my question is why is this happening? What's going on? And there's a variety of fundamental things from, we've had the election, we've got the debt crisis, debt ceiling, we've got the fiscal cliff coming. I just read an article recently that China is now beginning to mint their own gold coins. They've dropped them down to kilos, and China is going to a gold-backed currency, which is in all cases, from all the experts out there, is going to bump the U.S. dollar as a world reserve currency. A U.S. dollar is currently known as the petrodollar, and that makes it a reserve currency worldwide, and that's what gives it its strength. So as I've been talking, my perception is we're going to have some major market changes, and those market changes are going to affect baby boomers more than anybody because they've got a lifetime of savings. Now, the other thing that's interesting is you look at, the S&P is way up. It's 114% up over that time frame of 2009 through 2012. But all this money's exiting the market, and there's a couple underlying things that are going on with the performance, and a lot of it has to do with individual mutual funds. So if you look at individual mutual funds, what's interesting is that 65% of all large cap funds underperform the S&P 500. And then 81% of mid cap and 77% of small cap funds did even worse than their actual benchmarks. So the odds of you actually being able to identify on your, with your broker or within your investment portfolio, individual stocks or mutual funds that are going to actually beat the S&P, it's a long shot. It's very difficult. And then what, if you factor in the management fees, this is one of the things that makes these investing in these mutual funds and having your stuff in managed accounts by a broker problematic, is that typically, you're going to pay about a 1.5% management fee. And in order for the S&P, in order for that management fee to be worth anything, historically the average of the S&P has been 7.5% on an annual basis. That's the average. So what would have to happen? Do the math here. Your mutual funds would actually have to earn 9% in order to beat what the S&P is doing. And when we know that 65% of large cap, 81% of mid cap, 77% of small caps don't even meet their benchmarks or float within the same level as the S&P, you're essentially losing money in your retirement funds, as a lot of us have seen. Now, you guys know that I'm not a financial advisor. I just do a whole lot of research, and I share information with you all from what I'm personally doing. And I'd encourage you to take a look at your portfolios and find, get information from brokers or other folks, and just do due diligence on this stuff. But all of this information is available online, and you can go look it up. So what I am recommending, or what I'm personally doing for myself, is that I'm looking at alternate ways to get around the market. Now, if you guys stay with this, we've spent a lot of time talking about high frequency trading. We spent a lot of time talking about the cost and having things under managed accounts. And I'm a huge fan. I'm a huge fan of self-directing your retirement. There's a lot of ways to do that. We're going to start talking about that in more detail. But by self-directing and moving it out of managed accounts with your brokerage houses over to other accounts, I have found some ways that you can actually be successful within the market, utilizing algorithms and utilizing software that allows you to really beat the market consistently. And I'm going to be sharing that. That's coming up. I'm working on a project right now that I'm going to be sharing with you. But you know, the other thing is getting your investments into actual, you know, things that perform. They're not down 81% of the time, 77% of the time, and get it into things that are more asset based. That's like real estate, gold and silver, oil and gas, things like that that are real commodities, things that you can actually hold, touch, look at, that actually have real value. And the strategies behind picking up those instruments, picking up those types of investments and putting them into self-directed retirement accounts, and even going as far as putting them into Roth accounts where that any gains you see on that are tax-free for life. I mean, we're going to have a whole education coming up through 2013. We're going to be looking at how you utilize the tax code and how you utilize these instruments to essentially put all of your investments into the proper vehicles and get them into the vehicles so that you're growing your portfolio yourself, doing things you like to do. If you're into ranching, how do you invest in cattle? If you live in the Midwest, how do you go ahead and invest in grain elevators? You know, you wouldn't believe some of the stuff that you can actually do if you get it out of these mutual funds that don't perform anyway, and they don't even beat the S&P. So that's today, guys. Coffee with Great Wealth Strategies. Continue to fill up your cup. We're going to be out here doing these videos as frequently as possible. But please share this, Twitter it, Facebook it, get it out there so that we can get some followers. Looking for some more people to engage. And please comment on these afterwards. Thanks a lot, and take care.